See how it goes. Hey everybody, what's up? It's Booksy. Today is February 9th, 2026. I think it's been a couple months since I've done a stream. I'm not going to be streaming very long today. Hey, how's it going? I'm not going to be streaming very long today. It's not going to be a regular thing. I've had a lot of, let's just say, computer problems. My computer's, I'm reading it its last rites, let's just put it that way. And it's been really bad. It's not charging past like 58% battery anymore, and that's okay. It's old. I knew things were going downhill a while back. We were doing the streams, and they were getting pretty bad. And my goal was to stop streaming regularly, and I've done that. And I'm moving on to doing other things. And to be honest, the stock analysis has been there. I've been doing it, but mostly to just kind of swing trade and not really to just focus on AMC. So when we look at AMC, I'm not looking at it from the viewpoint of like, I've been staring at this every single day. Okay? That's not what's been happening. I have checked it maybe once or twice a week just to see what's going on. I don't worry too much about being down low. I know I've said it before, but when AMC dropped after hitting 240, that to me was kind of it. You know, you're in a markdown period. When we needed to have that spring was way back here, and so that was back in November. I mean, it was a long time ago now. It doesn't feel like it. It feels like yesterday, but it was a while ago. And so all of this bleeding down has been painful, and it's hard to stomach it and to watch it. But I never felt like beyond these twos that I really had much of an answer anyways for lows. And I think if you've been following the last couple of videos, you know that I've been talking about kind of the setup here and what's there and what's been lost and what hasn't been lost. And that's kind of all there is to it. So I haven't been following this, you know, quasi-religiously or something. I'm just kind of like checking in every now and then. A lot of my lines are still my old lines on the chart. They haven't really changed. Nothing's really changed. Like the creek doesn't change, right? And until it breaks, it's just there. It's the resistance level. Now you do have varying resistances as we go on, and we kind of dive down, and we're no longer getting back. Like we had this new resistance level around 170 right here. These are things that, you know, on your charting, and I haven't marked it off, but on your charting, you should be marking off like anytime it kind of comes down and creates a new shelf. It's probably proportional, meaning, you know, if you were to mark off all the shelves coming down, they're probably pretty even spaced. That's normal. But on the whole, you wouldn't want to ignore those. You just want to pay attention because those are brand new levels that you're going to have to watch out for, not things that we talked about. The 178 mark, that's unfortunately become a resistance. And really, if you think about it, that would have been a very nice support. That was where the offering was made way back here, was for that 178 price. And they were given, that's crazy to me, but they were given those shares when we were up here at $4, you know, all the way until I think it ended at $3, something like that. We were given this 178. I look back at that agreement. I feel like it's just a crazy thing, but that is what it is. Nothing's changed about that. So that level, that 180, a lot of folks had called that out. Not me, but exclusively. We had looked at it a few times, but a lot of folks had called that out, and it ultimately ended up proving fine, like correct, I guess, as a low, but it didn't even hold up. So looking back at this, I've been trying to take a step back and just go back to the biggest picture possible and see, like, is this still valid? When you look at these numbers coming in, and especially when they announced that they were going to dilute it by half, meaning you're going to have double the amount of shares potentially, that presents a pretty big problem if the valuation is correct. So I'll repeat that one more time, just in case that didn't sink in the first time. If they're going to dilute it and double the amount of shares, that's a pretty huge problem. Everybody would agree. If the valuation is correct, because if the valuation is correct and it was $2.96, or if it's $3, right? And you're saying we're gonna offer as much as what currently exists, right? So 500 million we're gonna add another 500 million shares to the pot. Well, naturally that's gonna dilute. You don't just magically increase the amount. And I'm sure all of you are aware of this. I'm not speaking down on anybody. I'm just telling you in case you don't know what that means. It is not going to magically create value. What it does do is it offers more shares to be owned. That is important because if you have operators who are looking to get the most shares, and I'm thinking about Vanguard specifically, who's been probably the one running the stock. They've had the biggest share count really since we dropped down, but specifically back here in as early as February of 2024, so 2 years on now. They've had the largest share percentage. I haven't checked recently. Maybe they sold again on that news on this way down. It's possible that they did, but I haven't checked. Anyways, they've been the bigger player. They've had the largest sums coming and going. So as far as I can tell, they're still the top dog. And maybe I'm wrong, but hopefully I'm not. I'm not speaking out of the side of my mouth here and end up being completely wrong. But they're the ones that I would point the finger to and say, yeah, I mean, they're going to be looking to get the most control over the ticker. And you have to remember that it's a percentage game, right? If I own, I mean, it's not possible, but if I own like 50% of the stock, right, then I have all the power. I can choose not to sell, and that just takes a lot of wind out of short sales, or whatever it may be. And so when you have a squeeze, they'd be the ones that are really kind of trading the most shares. And then also, in addition to that, when they do sell, it's bad. And they sold like 60 million in the big drop down back here. I mean, they sold a lot. So were they a driving factor in perhaps what happened back here with that huge drop? Yeah, they probably were. They were the largest as far as I can tell. So when we look back at the big picture, I'm concerned about like two things. Like, one, is the thesis still intact from a price standpoint? Like, has something broken, like really broken down? And then two, what about the on balance? And I've talked about on balance volume a lot. Before I go further, you may have noticed if you're tuning in live, we're about 8 minutes in here, that I do have the affiliate link on there. If you don't know what an affiliate link is, I don't get money if you click that. So if you think that I'm like getting bang from, that's not how it works. What it is it's for Tradingview, and if you have never used the platform before, you can basically get a month of the Essentials plan on me. It's a $15 credit, which will give you 1 month of the Essentials plan. I like Tradingview for a lot of reasons. But one of the bigger things about it that you have access to is like the indicators, which to me is a really big deal. There's a huge amount of community indicators, and some of them are really, really good. And you could pretty easily find a decent one and begin day trading off of it. You have to have a plan, of course, but you could find a good one, start day trading off it, and easily pay off, a month or two of Tradingview within a few days if you so choose. But anyways, there's a lot of great little features to it. I think it's a good program. Most of the benefits do come with a paid subscription though. So if you want to try it out, you can use that. And if you've already had it, you probably can't use it. I think that's the way it works. So, all right, that was it. That was my pitch. You have on the macro, you have this downtrend, and it is still intact. And we don't know for a fact that it's going to remain that way because it's difficult to say that this is still legitimate. I mean, when you think about what happened back here with Ape, with the dilution, both really, of the shares, like increasing it, but then the reverse split to kind of bring that number back to a reasonable level. There's a lot of like smoke and mirrors in that move, but on the whole, it should have been bringing back together what was divided over here. That presented a huge amount of room for arbitrage, right? And we're not really sure. I mean, everybody, I think, has a good grasp on current value that this is kind of odd because even back here, they were talking about valuations at like 1060s, you know, like which was really the previous lows from 2020. And have they improved their situation since then? Well, the answer is yeah. I mean, if you're just looking at it from a fundamental standpoint, is it improved since 2020? The answer would be yeah, it is. I mean, if you look at COVID and those first couple of years of COVID, it was not good, right? And is it better than it was then? Yes. Are they a little bit leaner? Are they a little bit better off? Yeah. If you look at the debt to asset ratio, right? If you look at what it is that they're actually spending versus what it is they own, that hasn't improved enough. There would be certainly a bearish argument there because they still have more assets, or excuse me, they still have more liabilities than they do assets. So that's a problem. That's not a good business model, right? So they've still got some work to do. I don't think that fundamentals necessarily dictate all the time what we see in technicals because we would never have had this run to begin with to 70s, right? If it was a fundamental argument. And sometimes that's just the way that it is. That being said, it's a trend. Has it broken? And the answer is no. It hasn't. If you look at this, this actually meets all three of the bottom points here. We're about to get to the fourth. We're really close. Really, really close. Like we're very, very, very close to that bottom. And in addition to that, I've also kind of mapped out, it's hard to tell. I know my charts are messy as always, maybe a little cleaner than you're used to even. Well, what I did is I created what I want to call like a more solid creek. I've at different times used different values here for peaks coming down, but I decided to use the drop-down value from June and then the drop-down value from November of 2021, those two markers. And those are like the peaks right before it dropped. The reason I'm doing that is because GameStop presented a really interesting chart when you looked only at the November 20th. It's usually around November 20th, roughly. When you look at that particular spot on the chart, it presents almost like a straight line of price actions. Very strange. It didn't deviate until this past November. So it was extremely like consistent in terms of how it was moving from November to November. Almost like, again, like once you hit a November, it kind of sets the trajectory for the next November until this past year. It didn't work out, unfortunately. But for the downturns, they all were pretty much in a straight line. Now, I'm not saying that's the same thing for AMC. It's a little different, but I thought that was very curious. And I went back and looked at AMC and I was messing with on balance volume. And I was specifically looking at where these breakdowns were occurring. And I saw pretty clearly what I thought, in my brain kind of confirmed a really long, long theory that I had. And this goes way, way back, way back. It goes way back to 2021 at this point. It's like 5 years, but 4.5 years, whatever. So this level right here, a long time ago, I had speculated that there was two drop downs that occurred, and one was up here, it was like $61, and then the second was significantly lower. I want to say this went from like 35 to 50, so it was somewhere in between there. But I was like, the numbers work really well with those 2 points. They don't work as well with the 72, although I do think the 72 matters. You can see that I think it did hit that long-standing kind of a trend line that was built for really a couple years or 10 months or so. Maybe not a couple years. It was more like 10 months. Back here in 2017, 2018 on this LSPY coming down. And there's additional ones right there. I'm not drawing on the chart. I don't know if they're meant to be necessarily like, I wouldn't consider them like target levels. Maybe the better word is resistance levels. I don't know if I consider them to be resistance levels. But they're certainly partially target levels, and probably here where we have a consolidation, that being the liquid shelf now. And by that, I mean that's where you have a concentration of, and I can't even draw it because of the lock. It's been so long, but we have a concentration of liquidity around that 200 level now. And I don't know if we're ever going to get back there, and it's not really the question I'm trying to answer today, but I do think that it may be prudent at times to not use the tippy top of the move when drawing things like a trend. So I use that marker, and it does help, I think, and this is a weekly chart. It does help to kind of click some things into place, especially where that reverse split is, and then going back to where we built that reaccumulation. It makes a little bit more sense of where that is. And in terms of the greater chart, you can see that it actually provides a really nice midline, and that is right indeed at like 1960 area, which is where we broke down where that gap is. So I think it's a neat number. I don't think it necessarily is the only number you could use for the top, and I don't think it matters that much, but I do think it is a very clean number. It works very well. So I'm using that point in November of 2021 as a top. So has it broken down out of this trend yet? Well, no. I mean, as bad as it is to go down low, I think at one point I did a chart that was actually quite nasty, and it looked like it went down to like $1.06 or something over time. I've done a few of those, and if you've been around for a couple years, I've done charts where I was like, I think go up and then come all the way back down, or I think when you look back at the grand total, if you just take a drop, and I'm not going to spend any more time on this than just to say it, but if you just take like a peak to where, if you go all the way to the peak, which was the previous like $76 area, $72 area, depending on whether you're using extended hours or what have you, and you just go to where it drops through the middle, where that gap is at like 1960, it ends up at like 99 cents. Like if you did like a 50-50 drive down. So there's been this kind of eerie maybe backdrop of like, that's probably where we're going if we're bears. If we think we're going to keep going down, bears want to get to a buck, right? So it's done, right? That means it's over. It's a penny stock. Well, it's been a penny stock since it dropped beneath, like 5. I mean, it's been struggling to kind of hold up for a long time. By definition, I think anything below 5 is like a penny stock. It's very low. Okay, so lest we think that somehow it's like significantly worse, really it's been down here for a long time beneath that threshold. And then it's actually even worse if you think about it in terms of the previous price, because the previous price here was 296, or excuse me, like 292 or whatever it was. And that was at 1080. So, I mean, if you think about it in those terms, this has been really low. No matter how you do it, whether you do it by deviation or you just look at the chart as it is, so proportionally. So let's move on. Let's talk about, yeah, we know it's low, Booksy, thanks. But let's talk about this because I did some interesting things with the chart here. So those blue lines that you see coming down, they're kind of varying. This one should be deleted. I think this isn't very helpful right now. But what this is I took that that value from November, and then I basically did again, a second drop that begins right here. So there's two different iterations early on. These don't look the same on the weekly, but if you go into like the 4 hour, the 1 hour, this little region from June to the end of June actually looks the same. It's just like a really compressed, hyperactive cat ear, right? And it consolidates and it ends what looks like now about 320s or something like that. And then it does it all again on the bigger picture, basically the exact same iteration, but larger, and it drops at 230. And then if you were to continue to do that, the next drop is actually way over here. I have another one, which is the creation of Ape. Curiously, or maybe not so curiously, all of those are in a perfect line. So I've got these big arrows. So that would be like a directional input, like, hey, this is where we keep going at the end of these distributions. Strange, right? Every time we've dropped to a new low after those cat ears, we're in a directly straight line. And it's very bizarre looking back at it now to see that. I've seen this before, like I've seen a lot of markers go through that August 2022 area, but this is very specific. It definitely hits right where that ape is. And I think that the area right above it it's really frustrating looking at it, of course, in retrospect, because at the time I was like, this could be a halfway point for like another move back up to 233, right? Or whatever it was back then, 35, 36. But at this point, it's like, that's clearly just a distribution. So I've kind of marked it off on the chart. And it's like, yeah, these are just like double taps for distribution. And anytime it's come above this marker, it's bled back down. When you take that to the current time frame, and you see where that is, you can see that right above us as the crow flies. I'm not saying that's happening tomorrow, but who knows? I'll get to that in a second. Right above us as the crow flies, you've got this zone right here. And if you were to just go straight up and you hit that same trend, and there's another big dilemma, or I should say there's another big kind of creek that's in our way first. But if you were to just hit that trend, you wouldn't necessarily come very far. Like this is February, let's say 17th. This only goes up to like 472. So if it were to be like, for example, this sort of a distribution motion right here, you might get up there. It could take quite a while. I mean, like what we did in March 2022 to August 2022 was painful. If you look again, I remember not liking it very much at all because of how low we went. This is very similar in some regard, right? You found a bottom, you push really high, then you push low, see how low you can go, and then when it comes back up, never really exceeds the previous high and doesn't even exceed that trend. Now, we didn't hit that here, and I'll get to that in a second, but nevertheless, you can see why that would be problematic. Like, just because you get there doesn't mean that you go beyond. Doesn't mean that you're necessarily going to go beyond that. Now, the flip side of that is what happened in 2020, which also had a very similar long-standing downtrend. I don't think it's wise to just kind of ignore the nature of breakouts. I think that'd be silly. Yeah, they're not guaranteed, of course, but once they happen, right? And if you go back and you look at, meaning like once they're above, then you have the possibility of holding that support. You go back and look at that weekly creek that was coming down from 2018 all the way through 2021, and that's a 3-year period. You have that final breakout. It's a nice 50-50 kind of clean jump over that marker. And then we come back and we retest it and then again reaccumulate on perhaps a larger channel, and that ends up being like a halfway point for the bigger move, yada, yada, yada. So at this point in time, could we have looked back here and suggested that something like this happens where it comes up and it doesn't break out? Yes. I think that would have been reasonable. I don't think at that time, I mean, I wasn't doing TA on it. I don't know if I would have looked at it that way at that time either. You know, we're very far from that now, but sure. Like, I think anyone reasonably could have looked at that and suggested that, yeah, it may not go back above there. and that this could take a while, or it could just distribute again, have like a double push here, and then just kind of head back down. Sure, why not? Well, the issue there is, of course, that this was a spring, and that once the spring is done, granted everything else that you see here being where it is, then yeah, you have a chance of having a pretty big push. Okay, so naturally, like you could say that, was what I'm trying to say is like you could say, I don't think it's going to jump the creek, but everything else here looked proper, it looked okay for a run up, so it would have been a good bet to make that it was going to run up. In our current time frame, I don't know that that's necessarily the case. I think that you have a mixed bag here because the last couple times that this has really run, it's had massive advances in on balance volume, but then not really gone very far at all. I find that to be curious because I'm like, in my brain, I'm kind of stuck on it because I think about in terms of on balance volume, like why would that matter? Like why would that be significant? Why would it be significant that this was still advancing as we're going downward, right? Why was this still advancing? And it's not a question mark in my head. Now I know that it's advancing. That's what I'm trying to say. I know that there's some questions about whether or not on balance could really be compared in the past here to the present. Mathematically speaking, if you look at the on balance formula, there are some issues in doing a direct comparison. I think that you'd have some problems because this is meant to be like a cumulative graph that moves over time, but then you've got these share count differences and all this kind of stuff, and it has to do with opening and closing values. But if you look at on balance volume, the formula, I've talked to others at length about this in the past. I think it's debatable. I think you could say it's not really valid to use a long-term comparison for it. But we have what we have. We can't ignore it. So I looked at two different things. I'm going to pull up, and it's actually on the video splash or whatever you call it, the thumbnail. I'm going to pull up a screenshot. So this is the, I'll bring it over here for a second. This is the, this is just the motion for AMC looking at 2020 run. So this is, of course, the bottom here in 2021. And then, the COVID drop. What's curious about it is that there's a creek, long-standing creek for on balance that's met on the weekly. Now, I've done this on the 4-hour. I've not done the weekly, at least for y'all. I think it's an interesting question because locally there was certainly a divergence. Like you could see that build out. It's pretty massive. The 2020 drop is the lowest that the on balance goes, and this again is on the weekly. Once it breaks and it goes higher, it doesn't ever come back down to that low again. So this is a divergence, and the price does come down lower. Simple enough. Bullish divergence. What's also curious here is this price, even though it is locally divergent, it is also curiously on the big picture also divergent. So you have this kind of build out, and it at first you're probably like, well, that's not divergent because this is lower and the price is lower. And I'd say, yeah, I know, but notice that the advancement that occurred during that cycle, that 10-month period, that push, it goes and makes a higher high than ever before, and that was lower. So the trend is doing a trend reversal down here when, by all means, it's not really broken out yet. Like it's already had the breakout. Does that make sense? So it hasn't broken out of its creek, its downtrend, if you will, in 2020, but the on balance volume did during that same time period. It already broke out and it was retesting it. It was coming back down to test the top. It's very bizarre. It almost looks like backward. It almost looks like, not backwards, but it almost looks like this period, which goes from like 2017 all the way to 2020. That almost looks more like the bottom that we see compressed here in 2020. And the breakout here looks more like what we experienced during the January 2021 move. That's all I'm going to say about that. It's not rocket science. It's pretty straightforward. The indicator broke out before the price, and it was long term. And you could see that massive hike that happens going into the reaccumulation. And you can see that even before, just before that run up, there's another hike. So I'm talking about two different ones right here, because the first hits right before that earnings, which I believe was November of 2020. Then it goes into December, and in December it hikes again and it breaks out again, and that's where it reaches up and it meets the top. And it's pretty incredible looking back and seeing how that on balance was like climbing out of there really fast speeds, right? Just huge amounts of volume, and I think it's fascinating with that upward momentum to look at that, because that's what I was saying. Like, you could look back at 2020 and say, well, I don't think it's going to break out there. It's going to just kind of hit its head and go back down. I think it would have been legitimate to say, yeah, I think it might hit the creek and not go any further. But if you look at the on balance, it's kind of like, I don't know, man. There's a lot going on there. And we know their RSI on like the 4-hour was divergent and all this other stuff. But so it's like there was a lot going on there that would suggest, no, I think if you leave, you're gonna break out. So then I'm looking at this big picture, and this is the on balance volume, the indicator down below. That's kind of where I'm going to land right now. I'm not going to talk too much about the nitty gritty. You guys can draw trend lines and creeks for yourself. I think it's pretty straightforward on this downtrend and what that breakout would need to do in terms of advancing back above 178, finding a support, yada, 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 246, okay, 239. Those are your key levels. All of those levels at this point, especially going back up to 3, just to really briefly touch on that, all of those levels are going to be above probably some of your major creeks down here, okay, or close to it, about up to 3. You have to get really back to that 350 area to be kind of in the clear, and then you have to hold support. So that's a big deal right now, because that's over 100% move, already. But I just want you to point out that, like, this is pretty interesting when you look at this side by side and you see this massive, and I'm not going to say what this means exactly, because I don't know. I just wanted to point it out because I don't think that, I just find it to be very curious. Let's just put it that way. When I look at this right here, I hope you see what I'm seeing, because I'm not going to be, I want you to read between the lines, decide for yourself. I'm not going to do the whole, this is what I think exactly is happening kind of thing. But this is extremely interesting, because when you look at this on its own, and you look at this advancement on its own, man, I'm not saying it's definitely doing this, but it certainly looks a whole lot like what happened on the big picture here. And again, the like on the small picture here, excuse me. So on the right-hand side, you have the entire, really the entire setup since 2020. And everything before then on the weekly just looks gone now. You can't even really tell where it was. It was there. It's there. It's just tiny, right? But then if you check out with that side by side, it's hard for me to look at this and be like, well, this is definitely happening right now, but I would be remiss to just not even mention it. And this is a huge deal, because if this is the case, this motion right here and this motion right here, I'm not going to say anything else. I just want you to look at it. Look at where we were back in the bottom when it broke out, and remember what this resulted in. This resulted in a massive move right here back to those levels that were being pushed. And when I look at this now, I'm like, I can't see it as one-to-one, because it's definitely not one-to-one, but there is certainly a lot of comparison to be made. And I don't think that it would be completely foolish for someone to look at this and suggest that on a weekly time frame that there's some interesting stuff going on with this motion right here. Remember what we just said, like the breakout happened before the price action broke out, and it was already breaking out as this was going to make a brand new low. That's pretty significant. And remember, this little area that has that peak is significantly lower. Specifically, if we were looking at this, and I'm doing a back and forth, but this is a screenshot, so it's a little bit clunky. This area right here, which is where that 2020 to 2021 low is where you have that massive hike in on balance. And it's hard for me to look at this and be like, I mean, if I'm just being objective, let's not be biased and say like everything's death because it looks bad. Let's not just say, well, we don't know for sure because of on balance, and we don't know for sure because of this. Yeah, I know we don't know everything. I know there's some little questions, there's lurking variables. I know that the fundamentalists will say, well, it's worse because you've got dilution. It's worse because, you know, Adam Aaron. I don't know. Pick your poison, right? You decide what you want to decide, I guess. I don't disagree. I'm not saying like, no, it's all rainbows and sunshine. It's not. There's certainly issues here, but it would be very difficult for someone to show me these charts. If I didn't know anything about it, it'd be very difficult for someone to show me these charts and reconcile these particular motions and just objectively, like what's going on objectively here with these motions. I think I would have a lot of trouble coming up with an answer that wasn't that something huge might actually be on the horizon. It may not be what we might expect. It may not be this kind of massive one-to-one thing. But again, you know, determine it for yourself. I don't have to give you all the answers here, but I'll be darned if that doesn't look pretty darn similar. And I know it's a mess. I know my charts are messy, but really similar. And if I were looking at this again from a helicopter standpoint and not really knowing what the prices were, if nobody told me anything, let's say I didn't have the prices at all, and all I had was the comparison of these two, I would honestly think that it's entirely possible that this would be going all the way back up to, frankly, all the way back up to 200 and then doubling, which seems ridiculous to me. But that's how extreme this is. Like, this is an extremely high on balance. I don't even know, what else to say about it. So you look at that comparison, you decide for yourself, take a screenshot. I don't care. Go look at the two. They're both weekly time frames. One is obviously humongous by comparison. But it certainly doesn't go past me. I'm like, yeah, that's pretty serious. Like, that's a humongous leap. And then if you look at the level this came back to, it's the same level. And that's all there is to it. It's the same level proportionally. So, well, Booksy said it, going to 800 or something. I can send him bags of poop when we're wrong. I'm not saying we're definitely going to go to 800. I'm saying that there's a very strong correlation in terms of the rhythm of this that suggests that a big move may be imminent. Now, that being said, and this will be my final point for AMC, I want to go over to GME. We are approaching the bottom here. And likewise, if you look back at each of these levels where the lows were, it is possible, and I'm going to just open up the on balance for a second. Every time we've had a massive run up, and there have only been like a few big ones, but specifically these two that I'm looking at are the May 2024 and then the beginnings of perhaps 2021. It makes a fairly linear, markup line, if you will. And you would say like, well, if that's the case, we're not there yet. We haven't actually reached it yet. And I don't disagree. It need to be a little bit lower if this is just meant to be like a straight line. It's possible that that's the case. And if that is the case, then it's not there yet. We need to come down a little bit more. It also is possible maybe this builds out one more time, up and then back down, and we do land on this and kind of double bottom. There is a slight kind of a bounce here. It's a lot smaller that happened into May, but it's possible that this still has one more bounce in it. There's a lot of questions with timing. What I will say though is that I went back and just did a measure to, again, that November 2021, which is a very significant marker in my opinion. And I looked at that to the bottom, and this is a perfect 618 retracement to that marker. So on balance, whether it should or shouldn't work fibs, it did work, and it did give a really clean mark out for the retracement. I also marked off the top of the June run here, and then I marked off in similar fashion the breakdown that we happened in November 2024 with the breakdown in 2021. You can see those lines going up right here on the on balance. They're parallel structures, and they are interesting. Again, the way that they're building out. I've marked off the way that the creek was formed with the peak in June, and then the next bottom that happened in February 2022 right here. That also points the direction, and we have something similar in that markup here. So I've marked a similar kind of setup. It's really tiny, hard to kind of see, but it actually marks out quite neatly. There is another one. You're probably wondering why I'm not using this one. This is a little bit better. Well, it's already broken down. And then I also went back and I did the comparison between the two and where those regions were. And I didn't settle on this one lightly. So I'll just put it that way. They're both valid. I think you could use either one. But these could suggest, again, perhaps that there's a need for a double bottom of sorts, which could mean that we're in for another iteration, even though the on balance looks super tight right now. Like it's already at that 618. It just hit it back here in January. It's possible that this needs to have like another move and then come back down again, right, before it breaks out. And that would put you way out here, like way late in the year, October, November, perhaps even going as far as, again, 2027, which is a bummer, but hey, it is what it is. Certainly there's a possibility there. But what I will say is that every time it's kind of met this mark and come down this low, you've seen this massive push out. There's one key difference right now, which is, again, like it's an important difference, which is this had a rising second advancement. This second advancement here, where that foretop is, didn't rise higher. So that particular creek line is lower. I did do some checks on this just to see what that meant, perhaps for the overall chart. And what I found was that this is roughly a 50-50. So that is a good indicator of like how far this went. On balance wise, what's important to note is that this made a massive advancement in on balance, but it did not make a massive advancement in the price action. This is the, again, April 2024 move. This is a huge advancement. I would call that bullish divergence. As you can see, it's dropped. So maybe you'd be like, well, it's not bullish divergence anymore. But it's the same thing that we've talked about before. If this is making an advancement and it's coming back and retesting some levels that we were kind of stuck at for a while, or in the case of all of this stuff going on, retesting where we have this reverse split, which again appears to be the same level that we're at now on balance wise, we are indeed perhaps coming out above it and then coming back down on top of it. It could be signifying a breakout in the long term on this on balance indicator, whereas the bottom looks like it hasn't broken out yet. Very similar to what we saw in 2020. Not saying, again, it's 1-to-1, but I do think it's possible. So here we have the dilemma, right? It's like, well, there's all kinds of what ifs here, Booksy. You've got this decent, maybe big picture view that shows that this could be a massive loading up of shares for a longer term move. It's got the potential there with the side-by-side comparison. You can see fundamentally like it's possible, but where does it go? How far does it go? I'm going to stick with like what I know, not with what I don't know. What I know is that this looks particularly bullish if you compare it to the method of what happened here. That's it, objectively. If you look at it from the standpoint of creeks, you know, again, we don't have to go very far to hit that creek. And the reality is unfortunate right now, which is that, look, just because it happened that way last time doesn't mean it's going to break out. And I would agree. That's true. It doesn't have to be the same. And it certainly could be similar where you have a massive run up in on balance volume to that 2024 where it just goes up really far on balance wise, but the price action doesn't go that far. I'm going to point this out. And again, just kind of leave it at this. This is the same measure. I just took the measure from 2024. This is the same measure off this bottom, which is like 127 all the way up to the top. And it only goes to like $6. So a 300% move here takes you back to 6, which is really like the same area we dropped off. Now, why would I think that that's actually probably bullish, potentially? I'll tell you what I think, and then I'm going to move to GME. And this really is going to be the last thing. So we don't know what we don't know with the on balance. Maybe it skyrockets the on balance, but the price only goes to 630. So then what? We're stuck, right? Not so much, because remember, the same thing happened back here. It skyrocketed, went way beyond, but the price action only went to this particular high here. I mean, it doesn't feel like that because it went thousands of percentages. You know, we're talking about this huge squeeze move. But just in theory, like this didn't go that far on the grand scheme of things before it reaccumulated. It backed up and then reaccumulated. And the on balance volume at that point had taken off and was gone. So proportionally, do they look the same? No. If you were looking at these, I'm a visual guy, and if you were looking at these and you saw this and you saw this, proportionally, this should have been like way up here already, right? It would have advanced and gone, the price would have advanced and gone super, super high, like way above, just comparing the two lines, that's all. So, I mean, it's possible that we see this massive advancement in on balance, perhaps even going beyond this channel here, because I looked at this and I was like, well, let's try the 50-50 from this 618, which goes from the bottom all the way up to the drop down in September of 2024. And sure enough, if you do like a 50-50 here, it hops above where that creek line is and goes right back to this top. So potentially go to like 4 billion. And you could have a very similar move. That's not significantly different in terms of the buy-in rate that we had back here. So, I mean, this is where I'm like, it's not really one-to-one. You could compare it, and then likewise, but it's ultimately not going to be one-to-one. This could go ridiculously high, 7-8 billion or something ridiculously high. I mean, it could go way beyond just like it did back here. But it doesn't necessarily mean it's going to go straight up to wherever you think it's going to go. I'll say this, and again, I wanted to sort of finish talking about GME for a minute, and then I'll be done. The whole point of this was to save some energy in my bad computer, and then that way I didn't have to do the video and the upload. So I'm trying to keep it concise. I do appreciate seeing you guys and your comments, but I won't be doing any extra stuff today. So then my thought is, well, let's just say, for instance, that it did have this big buy-in and it gets above or at least hits this level right here, which is around $5 to $6. Where does it need to back up to in order to hold that support? I think the simplest answer is just look at the local creek, right? In theory, that's kind of the simplest, easiest way to do this. That's the local creek, right? Go back to 2023 and just kind of see those original tops and then just doodle a line down there. Ignore the big push out for now that happened. And you can see like that's been fairly consistent resistance. There's another one if you want to go a little lower. This one would be like a cross, and that would be like right here. So you go to instead the top in June 2024 and the peaks from where we were in kind of a similar time period, June 2025. It's not that different. You see it just barely raises it by like, shoot, not even like 30 cents or something. So that to me is pretty straightforward. Like this is where the creek would jump, is actually where the floor is at 239. That's pretty convenient. It is. I mean, it's a nice setup. In theory, could it go all the way to the top here and then back up and then try to advance again? Well, the answer is yeah. And then the next part I don't really care that much about. It's not like of the utmost importance to me. I think the way that I had imagined this was that it would probably not jump this creek, that the bigger one, which is the massive one, coming down until the end. So I'm moving my lines as we're talking, but I sort of imagined that might not be the case. It may need to be quite low and like consolidate down here in the threes before anything else. But if this were to break and go to the upside and then held, it would be very similar to what happened back here, albeit lower. So you could have this massive hike and then again advance there and then go up. And you might be thinking at this point, well, why would you stop? Why would you stop here? Why not go all the way back to like the top? Why not go all the way back up to like the tippy top here around 200? I'm not going to say it's impossible given what we just saw. And you can see even on the chart, it's like, well, look, it could do that. But remember, we have this channel. We also have this drop ledge area here. And I've gone back and forth about this, about whether or not it goes anywhere beyond there. I'm not convinced it even needs to go that high. I actually think that using what we know about the shifting values, I think it's very possible that it never gets back up to even 34, which is strange. Or if it does, it takes a lot longer because there's a lot of like little questions in my brain about what the shift means. But what I will say is that if this were to be considered as the creek now, which is quite low, and that's where we have the breakout and a reaccumulation, it stays down for a lot longer, your 50-50 doesn't need to go significantly high. It just doesn't. And we'd be kind of in this place where, yeah, it'd probably come back up to near like 15. And this is where you get into the nitty gritty of like what really happened during that reverse split and all the other stuff that was going on. This is very low. And some of you are going to be like, well, that's crap, dude. Maybe. But remember, like, this could be a long-term build out for something else. And I don't know exactly what it is, if it is. Also, remember, like, this makes sense anyways of the levels that we have here for resistance, because long term, this is still I've got it already on there, but this 1030 is still like a ceiling. And then looking a little bit more maybe zealously at it, you could even say like these particular guys create like a new ceiling right here, which are just slightly elevated. This is only 1267. Now, is 1267 a reasonable price for AMC? Probably. I mean, you look at something like Cinemark, it makes sense. For AMC, when it's diluted, that would actually be quite a bit because you've got double the amount of shares. So it could be that the reason that we saw these adjustments and why everything seemed to be kind of getting lower and lower and lower in terms of price targets, like my first price targets, if you guys recall, I was like, we might see something like this. I thought it would go up to like 8, and then I was like, oh, we might see something like this where, it comes down and then does something like in 2020, and then it breaks out, and the first targets were like, oh, it'll eventually go like way up here. And then over time, we've seen this kind of like weird downshifting where everything seems like lower than you would expect it to be. On balance, it's going sky high, right? But everything's kind of low. It doesn't really make sense. And now we're looking at it, and it's like, this structure fundamentally is very steep, and this one's feels very flat. It feels like it's already broken down. It's not going anywhere, right? Well, maybe. If I were to use a line just like this one, I'd probably, again, refer back to this or this, and either one of those could be considered like a middle. It's either this one or this one, which they're drastically different, I know. But I think these are eventualities. Like, they're things that like were caused by certain events, and then it adjusts, as a result. And we don't know the answer. So like this to me would make sense as a window for possibility from about $3 all the way up to like 21, or then maybe in the future getting to that 34, but it doesn't happen till way over here in 2027, about a year from now. This is nothing new particularly, but like you could have done this a long time ago, this particular triangulation. Does that make any sense of all of this other stuff? Sure it does. Because, again, we're looking at what I would call like the middle of the ears here. This eventually goes back up to this marker from 2021 that I'm referring to, this triangulation. This eventually goes back up to that November time period, and then it, you know, that's where it terminates. It goes beyond it too. And you can see the wave across it perhaps is a nice like slingshot. You could pull back and then move above. Looks very proportional in terms of that. You can see that move back to it. So I don't particularly find that to be that interesting now. I'm just kind of thinking about it. But like you could see something similar, you know, in nature. Whether you use a low line, a high line, or a middle line here, you could see a similar like, I mean, if it were like way up here, this would be super far. Because if we go like way up here, right, and then it would come back down, which would be crazy. But then again, that on balance volume, it's kind of like, how do we reconcile those things? Like, I don't know. Like, how do you reconcile what I just showed you in the on balance? It's like, I'm not sure. It's a similar build out, but it's humongous. It seems unrealistic for sure. But there it is, right? Is that possible? Sure. But then I'd also say that it's just not, maybe not my favorite, but I'd also say that perhaps this is possible, right? That this is actually your pull down, and you are going to have this kind of breakout, but only over time it's going to go up to like there, right? And then you're going to have a similar reactionary move, but it only goes up to like 12 or something, you know. Hard to say. Good. So you have no idea, Booksy. Thanks. Back to the basics. Booksy doesn't know. Yep. Pretty much. I very rarely claim to know it all either. I do speak that way sometimes, but I don't really believe that. People can accurately predict it 100% of the time. I think it's nonsense. So, locally, I'm looking at this as the wave. I think that this is a breakout at like 6. So I'm specifically eyeing 6 because it's got the same amount of move as the first. I don't want to get you guys too excited, but this is a really small window on the weekly, right? This is only 1, 2, 3, 4 weeks. This is a 1 month period before it just took off. Could it take a lot longer? Maybe, but a 1 month period is pretty tight. If it hasn't bottomed yet, then we're looking at potentially maybe April or May, right? And then the bottom would be in February, kind of the opposite of what I had expected for February 2026, right? Well, good job, Bucksy. You identified yet another pivot, and it's low. It was not a high point. But if we've already kind of bottomed out, or we're in the process of bottoming out right now, it's actually not unreasonable to suggest that it could be very, very, very soon, like by mid-March, like very sudden. Because in theory, once this hits the bottom and reacts, you only need about a month. So if it bottomed right now, or if it has bottomed already, or near it, like we're in that cycle, I don't know. You could see a reaction as early as middle of February and then go. And I think that 1 month period is not unreasonable. It just isn't, especially again considering what we see on the on balance volume. I don't think that it's I don't think it's necessary to spend a lot of time. I can't see an example where it's just been like sitting down low. Once it hits that bottom area, it's kind of like, all right, it hits there. This one only spent a month there, and then it took off. And I think the same was true for 2021. It took about a month in that low, and then it took off. So we could already be in that mode as of January 2026. So it could be as early as February. I'm talking about on balance, right? I'm not talking about just price action. Price action might go a little lower, but the on balance has already been down here. So it's certainly a possibility that we've already bottomed on balance, is what I'm trying to say. And that we might bounce out for about a month. And that would mean February 26, 2026, at least on this chart. That'd be crazy. It's not impossible. Strange as it might seem. You really won't let go of February. It's not that. Just look at the chart. And yes, I won't let go of February. GameStop. So this immediately this looks wrong because it looks like I just go straight up, but this is actually with extended hours on. So this line, again, it looks kind of off because it's like, well, you just have it going straight up. It didn't do that, so we must be dead, right? Not quite, because the timing of it was pretty darn close for the takeoff. But then these are extended trading hours, and when you do this, I don't know if you guys know this, but on Tradingview, it sort of parses out the line. It doesn't mess with your drawings. So you need to make sure your drawings are on different settings. So like if you have drawings on extended trading hours, they're going to look really wacky and weird on regular trading hours. And it makes sense. It's a mathematical thing, right? If you think about coordinates on a grid, you've expanded the grid here. So it kind of jacks it up. I had a wedge on this one, and I was looking specifically at possibilities of like where this might go. I don't want to like freak anybody out about GameStop either. It's similar to AMC in some ways in that it had this gap up moment at 21.83, and I don't feel like it's impossible that it comes back down. If there was a bottom that was to be had at 20.90, there was a support that was built right around there, but it would not surprise me if this needed to come back and retest those lows. If this is like the phase B bottom where this sweep was, which isn't significantly lower, by the way, than anything else, I don't think it's out of the realm of possibility that this has like a really fast flash in the pan extension to just above like 26 to 28. And I'm not even confident it's going to do that, but if it did that and then came back down, I don't think I'd be like overly surprised. I'm just telling you that if it came back to like 1940s, when it came low, I thought it was going to hit like 1930 something, and then it never did. It kind of just avoided going low. Because I find it curious now that there's a jump over this creek, but there's a gap and there's no backup to it. And then long term, it's kind of like, we may want to get down there. I don't see it as a way out of left field call out either. So the bear in me is like, I don't know if we came low enough. There's certainly a possibility we need to come back down again. And again, that could be like right before a big move. But if we're talking about a longer duration of time, like we were saying with AMC, if it has this kind of longer duration, it could be another April move, then I don't see why we wouldn't have time to do that over here. That being said, the window for this bottom, as far as I could draw it, as best as I could draw it, seemed to be, again, all the way leading up to about February 26th, 27th. GME has it at different times front run, but there's some key differences in this that I don't feel are that great. On the one hand, we have like a big hike in volume. A lot of that's because of Michael Burry and comments made by Cohen about, buying some, getting like extra $1 billion in value or whatever, billions in value. We don't know what that is yet, what acquisition he might be making. Burry has spoken very highly of him recently. He said he might be the next Warren Buffett because the guy is very patient and methodical. All good, high praise. All that stuff caused this like spike and breakout. But again, we left a gap, and I don't really love that. So there is a high volume break there. I don't necessarily think that means it has to run. I'm looking back at what happened here, and there was a high volume break early, but it goes all the way back up and consolidates on top of a support level, which was at 1581. Is it possible we're doing that by consolidating above 2350? Yeah. So if you're following GameStop's chart, then you'd be watching that 2350, and if that broke down, you'd be looking at coming all the way back. And I genuinely has GME front run. Yeah, during this May breakout, AMC was going down into its spring, and GME was already at it like an SOS of sorts. So it was already breaking above and coming back up through the range that it had kind of dipped down from. So yeah, it's not impossible that it goes low, but GME has the ability to kind of run up, maybe ahead of. And in terms of like where that goes, I can't give you like a perfect answer, but this is the way that I would see it comparatively. And this is the same thing. This is a long-term downward creek. It only goes to like 46. 46 is a reverse Fibonacci of like a 618 or something, from some key levels down to the bottom, and meaning reverse, meaning like bearish retest. So we already technically checked it back here, but I do think that going back and looking at that June to where we are now, it would make some sense. There's also evidence to suggest that that may not stop there. And if it doesn't stop there, it could be going up to near 80 again. I say again because it went to like $80 in extended trading hours back in May. And you know, the equivalent for that, if you think about it in terms of numbers, the equivalent for that would be AMC going to just 14. Because AMC went to 1330, I believe, something like that in extended trading hours. So roughly around the same area. So I mean, if GME were to go back up to 80, that would be the way that I would look at it. The difference being, of course, at least now, is that this would be a major breakout, very high, excuse me, on GME. And I mean, you could see why, but this would be like a massive break above the creek. I'll get out of this view for just a second. If I can get to the little button. My buttons are missing. Why are they missing? Don't know. They're just missing. I don't see it. There's supposed to be a little expansion button, but it's not there right now. I think because my internet blipped out for a second. I'll just do this. Scooch it over. There's usually a little window open button right there. But yeah, I mean, this would be a breakout of the long-term creek here. And what's curious is like that move to 80 this time would break out. It's just the same, almost the same move as the first one. But this one wouldn't have broken out. This one will. This would be above now where that creek's been established. So likewise, if AMC for whatever reason were to run up all the way and it didn't stop at 6, or maybe it does, but it doesn't. This could be very similar to kind of that June run up in AMC where this does go, but it goes later in June. And maybe GME hits its peak early at 80, and then later on it goes back to 80. Remember, a GME here went high first, and then it never came back up to the top again. It could be a similar situation where maybe during this particular motion, who knows? I made it really long-winded. Again, it wouldn't surprise me if this went straight up to like 80 all of a sudden, maybe around March or April. Between now and probably April would be appropriate, or maybe even as late as May. But if it goes all the way up there and then never goes back for a long time, kind of recycles the same patterns, and maybe around August, just a thought, or October, this is kind of dancing around 60s, right? Doing what it did back here, and AMC has a second run up and goes to like 1330 or whatever, what have you. Right? I think it's possible, and I think that might be a good explanation as to what we saw here with this slight increase on that trend. And the fact that it did hit 1330, but like not in regular trading hours, I think it's a curious idea. And it makes sense because this would have jumped right here going up to like 6. This would have jumped that creek. And maybe it needs to reaccumulate. Takes time. Just a thought. Who knows? Okay. So that's what I've got for GME. This is not a particularly interesting chart right now because it hasn't left its range yet. I mean, it didn't really make brand new lows here. If you look at those early auto reactions backwards, it hasn't made it a lower low than those. It's still in the middle of its range. It's kind of right where it has been, around 24, which has been a historically very sticky level for GME. Getting above it tends to be pretty bullish. Getting kind of being stuck below it could be a little bit detrimental, cause you some knockdown. So not unlike AMC, where I've got a couple different ideas about maybe where that weakness would be found, and the possibility of lower lows if there is a reaction here, and then it doesn't go higher. I think GME's got a similar problem if it reacts and doesn't go higher, where you could see a kind of a stop at like 28 and then come back down. And that's where it would make like a low, maybe going into the next. And fundamentally, GME's been fine. It's been doing well. There wouldn't be a good justification for the sell-off, except that it's just a GME after after earnings sell-off. You know, a lot of times we'll run up right into it or right after it and then just drop. And it's like, well, the earnings were good. Yeah, sell the news, right? That wouldn't be surprising to see something like that going into March. So I wouldn't put too much thought into it. I'd just be like, okay, you know, there it is. So if we saw something like this building out into May, that wouldn't surprise me too much. Maybe the acquisition or something, you know, or I don't know, Bitcoin is sold. Who knows? But yeah, so those are the setups. It's a very simple one for GME. I don't find it to be particularly confusing for GME just yet because there really hasn't been a lot to say. Like there's that creek that was jumped. You could retest it and simultaneously retest the 21 low, or at least retest the gap for liquidity. But if it doesn't do it soon, then yeah, this could kind of bleed down pretty low. And eventually, I suppose if it just kept going, and I haven't really done it this way, but yeah, I guess eventually you could make an argument that, well, I think it's going to come all the way back down to 18 or 17 or something, I guess. People have been saying that since we first went up. No, it's going to come back all the way to 16 or 17 right here. Yeah, it might. I mean, there's probably some little gaps down there and stuff. If it's an iterative function, I don't think it goes that low because from an iteration standpoint, when this backed up, it didn't come below that original auto reaction down. There's a lot of strength there. See that? So we would have to look back, and I've done this before, and I don't find it particularly super interesting, but you can see where that is. That was where like the 1930s levels comes from this particular zone right here, and then before that there was like an 1830 zone right there. So that's possible. Okay. What about everything else here? Well, look, objectively speaking, again, does this look like a 4 top, 1, 2, and then a small 3, and then a 4, which is a hook? Yeah, so I mean, if it doesn't break out around 29, I would consider a 4 top, but I would also be cautious to just ship it and say it's going to go down really, really low. There's a similar 4 top right here, 1, 2, 3, 4, and you can count those waves 1, 2, 3, 4 as diminishing waves on a triangle, and I think you could do the same thing here, 1, 2, 3, and then maybe if this doesn't go much higher at all and drops 4, sure, you can count them as like diminishing waves, right, on this kind of move down and this move down. I'm not really here to like overanalyze that part. I genuinely think it could be finished because I could even count this wave as 1, 2, 3, and then 4, and then it's done. and this is a breakout. But 4 usually leads you low. So if this was the low, it just goes, like I said, same deal. You'd find support at 28. That's going to be the key level, in my opinion, right there. And once it gets to that level, you'll know. It intersects really neatly, very neatly with where that gap is too. Right here at 29.93, or we could just say 30, down to the next zone, which is like 27. You see that pocket right there is right where those blue lines are going up. That's the same zone we were in when we broke out. It's right over our heads, folks. I really do think it's going to be like a now, or it's going to take until maybe 2 or 3 months, because you can see where that is. It just has to reach up and get it. If it gets right in that little pocket, you would be right in that zone where you're right between those two drop ledges, and you'd be in that squeeze moment. If it can get there, it's going to probably take off. And then that would be that, right? You would say that was 1 here, 2, and then 3, and then 4. And they did shrink. They do get smaller. It's like a beak. It is a diminishing. It could be finished. It's that simple. But if it, on the other hand, does not do that and it starts bleeding backwards, that's where I'd be like, okay, let's talk about that as a 4th wave and not worry about, and you guys are like, waves? These aren't. No, it's not quite Elliott wave, but I'm not trying to make it Elliott wave either. So I'm talking about waves just generically. And in terms of like kitty cat ears. Okay. So low end 46, high end 80. Low end would make sense if we kind of prescribe to this idea that it's a smaller iteration, just like this one. So wouldn't it go back to a similar area? Well, that is the similar area right here. That's what I was trying to say. Like in proportion, it would only go to here. So if it's just going to do another iteration after this, then it would only go to like 46. AMC would only go up to $3, right? And then this would crap out, and you'd have probably another iteration just like this for a time. Again, low, and then it would go up again. And this is similar to what we see here, potentially for AMC, maybe going down to $1. So those are the two major kind of things that I'm looking at. I think this is probably the least likely, to be honest, for GME right now, but well, let's just kind of leave it at that. Because like to me, it's like, look, I guess it could go down. I'm worried about the gap. I think there's some little issues. I'm more concerned that the count's not right, and maybe I'm kind of jumping the gun, you know, thinking that it's finished, and I'm just kind of being hesitant about saying it's going to go. I'm really looking at that second level though, and I don't think we could say until it gets there, especially that little pocket zone between like 20 and 30. I don't think we could say confidently till it breaks over there that it's going to run. And that's still a pretty big run. I think if it breaks over there, you're looking at, again, an extension up to like 46 to 48 area. And then the possibility that it just breaks and goes to 80 certainly is there. But I didn't really want to talk too much more today. I think that was it. Oh, I guess I should mention this. This is a 4-hour extended time frame for GME, and this has kind of turned into a bearish divergence, as you can tell on the RSI. So the RSI has been coming down since we hit like 24, and the price was trying to kind of eke its way up. So it's a mixed bag here, because sometimes I look at divergences and I'm like, oh, it's definitely going to turn down. This isn't one of those times, because there are times where a divergence does initiate like a big turn down, but then there's other times where that divergence is really more about cooling off and like kind of relaxing the RSI. So there's a bit of a wedge here. If you want to draw that on your chart, you can do that. I think, yeah, if it has kind of a head fake and then breaks down, it's probably breaking down the price. on the RSI, and that's where it's more than likely to come back low to that gap. And we would see that and not be super surprised because we're like, you know what? They left this huge gap there. They might come back down to 21 area. But if it just is reconsolidating and kind of coming back to that 50 on the 4 hour, it could just be to kind of give another leg up. And if that's the case, you know, you can go back and look at where it ran from down here on the 15th of January. That's the same area. So it's hard to tell on this chart because my lines are kind of off. I'll highlight it for you. It's the same zone. That's the 50. That's where it ran off of, way back here. And it makes a pretty decent extension. So you could make a case that, you know, if this holds support or it breaks out to the upside, that the next level would be 29.37, which is appropriate. That takes us right up to this little pocket. Okay, I think that'd be an appropriate way of using RSI to kind of gauge perhaps how far you could go. Granted, there's a huge amount of volume here. I don't think you should read too much into that just yet because there's a lot of volume and distribution as well. So just be careful assuming things. I would just be waiting for that breakout. So, real quick, I'll throw out a couple shout outs. I've been watching Roblox. I think this one has got a huge amount of negative news behind it, but this is way undervalued and it's at historic lows. I'm not going to do the full chart, but it's like really, really low. The RSI hasn't been this low since like macro bottoms. And then it almost universally has price targets around 130 down to like 100. So 100 to 130 are retracement levels, and this probably need to be updated a little bit because I think I pulled it down. Yeah, so like 100 is right there at the 618. It's like right on the dot. I'm not saying it's going to go there overnight. I have no idea. You can see my chart. I have like different ideas about how long that could take. If it builds out a bottom, it could trade down here for quite a while in the 70s. But if it has a big reaction to the upside, I think it's very possible it goes all the way to like $100. So that might be one to keep an eye on. And then I would highly recommend, if you aren't interested in it as a company, that's fine. But I would highly recommend you look at Nintendo. Nintendo's been around for a long time, like over like 125 years or something, okay? Long time. They recently started making movies and doing more stuff like Legos and other junk merchandising. They also recently announced that their Nintendo Switch is their biggest selling console of all time. It's past the DS. The Switch 2 is doing pretty well. I mean, numbers wise, not bad. And it's got a lot of support. When this rallied, I said I thought it was a likely cup and handle pattern right here. And I bought in around, you know, really low. I mean, I bought in a long time ago, a couple different times. But I had pretty low numbers, but I bought in more around 13 and I sold when it got up to like 23. It was a good trade long term. I don't trade options on it. It was divergent all the way back. So it was divergent really since the very first breakout, which is kind of crazy. It ran that whole way on like bearish daily divergence. The reason I'm suggesting it now, and I'm just going to say, like, I just look at this and I'm like, this doesn't seem bad to me because it didn't do a good job of checking these creeks out when it came back. Just like anything else, I'm looking at like back tests. It's like sitting right on them right now. And if you look at the lows, you might be saying, well, it just hit this massive low. Maybe it's going to react. No, it actually hit a low, and they're about to have their other movie come out, the second Mario movie come out. It actually hit that low back here. So the RSI bottomed out back in December. This is all currently reading as divergence. So this has come down really low. It's like a widening spread of sorts after this drop down. And this is what we have. If the RSI breaks out here, I'm willing to bet that this long-term RSI trend will be tested and perhaps bested. And I'm guessing that that's going to happen with a lot of crazy price action. But to me, this still looks and reads like right now as like a widening. So I think that this is going to be a pretty significant move where you'll see the RSI break out and then probably come back down in the future. So this will probably go up really high, break out, and then come back to retest. And during that time period, maybe the price action doesn't completely break out, but if it comes back up and even does like a 50-50, it's going to be a pretty significantly big move. Long term, is this company going to be worth more? Yeah. I mean, right now, you're literally getting a buy-in that was before they even announced that they were doing films and all this stuff. So I think a lot of this is just back testing. I'm not going to say it like with 100% of any kind of certainty, because I know you're probably looking at this saying, well, this could be a widening too. What if that breaks down? It goes all the way back down to 9. All right, fine. You don't have to trade it. It's up to you. Look at the chart, decide for yourself. Historically, this is a very low level, though, is what I'm trying to say. In terms of like how often it's hitting these lows and then where it goes from there. I would not be surprised, and I'll say it once, I'll leave it at that. I would not be surprised if it hits these levels, maybe consolidates a little bit, and then takes off and never comes back again. Like long term, I would definitely not be surprised if it can come back above here. If it again takes off and you never see these levels again. Like it can be that simple. If the company is profitable and it's doing well and its business model is doing well and it's finding success, long term, like that's what I'm trying to say. Like it's really close to where that bottom is. Like worst case is it maybe comes back again, but yeah, I don't see this as much of a question mark. And considering the lows that it's been reaching, like it would be totally reasonable to say this could go to $30, if not higher, and maybe even break out of this channel. The company is valuable. And then they've had missteps over the years, but they're still around. Gaming as an industry is really struggling right now. I've been trying to break in myself, and I've been doing a lot. I'm doing animations on a game project. I'm doing a game writing course for narrative design, and I'm enjoying every moment of it, but I've also been learning product management, project management for production. So I've just been really enjoying my time the last couple of months. I've done a ton. But the industry is kind of in a whack spot. They keep having layoffs and problems. That being said, Nintendo is very indie friendly in these days. I know it doesn't seem like that because they're always suing people left and right for intellectual property, but they do host an amazing amount of indie support on their platforms in terms of output. You know, it's up there with like Steam in terms of indies. Like just a ton of people get their stuff produced on there. So it's kind of inoculated a little bit from the AAA junk that's been going on if you follow games. Anyways, I have a decent amount of confidence that as an industry that has theme parks, or excuse me, as a company that has theme parks, it has film, you know, like a cinematic universe, right? They made $1 billion on the first Mario movie. I think the second one has to kind of show it up or at least be as good. But if it can do that, I don't see why they can't continue. They have incredibly high selling consoles. Their hardware tends to be on the cheaper end. The whole thing with the tariffs and chips has caused everybody to have increased prices for consoles, but we'll see if we can get through that. Anyways, so long term, I think this is a no-brainer. I would suggest that one. And then Roblox, I'm like, it's gone 10% today. I've been kind of buying in towards this bottom, and I'm doing okay. It's like the options weren't that great, so unfortunately the profits haven't been very good. But Um, yeah, I think it could easily go up to, $100 in the near future. My only concern is it gets kind of pinned, maybe low in this region and then ends up going sideways, but still, maybe a little late for that one. So that's it for that. I'm not going to talk about anything else. I really appreciate you guys hanging out. Yeah, the warrants chart is really interesting. I didn't get to that today. I'm only on here to do the fast one over, and then I got to be done today because my computer's not doing very well. But the last TA you did on January 15th was your best. Thanks. Appreciate that. I don't remember what I did, but I think I said I thought I could go lower. Then it went lower. This one, I'm going to leave this chart as the final thing today because I know there's like some bearish. You can see on my chart, I've got some bearish outlooks here that aren't the greatest. I'm trying to think about what this dilution could mean and what it could signify for AMC and why that would matter. But I'm having a lot of trouble, I guess, reconciling that with, again, what we see with on balance. And that comparison that I made is kind of ridiculous. I know. I get it. But I'm just saying, like, at the time, of the making of this, it's like, I just can't really ignore, I guess, what's right in front of me. So I'm not going to say that I think it's going to be exactly the same or it's going to make some huge move. But considering like where we are and that the distance is now basically equivalent, I think it makes a lot of sense to come back to 5. I really do. Even though the dilution is on the horizon, like it hasn't happened yet because it was supposed to be a long-term thing. It's like people are pricing it in, but it's really supposed to be a long-term thing anyways. They wouldn't do it all at once in any universe, They said they weren't going to do certain amounts for 6 months. So, I mean, it's like everything we're seeing now is ahead of time. All this selling. I can't unsee this. This is really curious to me. So I'm of this mindset that maybe it's not as black and white as we think it is. I don't think that, again, that dilution is a positive thing short term, but who knows? It's a weird one, that's for sure. It's like, how could you possibly think that's going to happen, Booksy? I don't know. I don't know if it's going to happen, but it does kind of lend itself to this theory that I have that, well, maybe there's something else going on in this in terms of like a slingshot. So I've got very conservative values on the screen. I'm not drawing it to the moon, but proportionally, it go pretty high. And by the way, I think I've mentioned this before. I'm going to leave it again at this. So I've done this before. I've shown you guys the shifted chart, right? And we've done this kind of both ways. We've shifted it up. And we've also shifted it down. That's not the right one. Yeah, this is probably the two that I would use. The lower ones. These are deviations. I don't think they're actually... I don't think they're wrong, but I don't think... I thought for a long time that it was probably something to do with the valuation shift, but I think they're just using existing standard deviations. But this zone right here, these two little markers, I completely forgot to mention this. I know I said I was done, but I did do the shift twice. I marked them off with these blue lines. See these two blue? I don't know. Maybe you can't. It's too... I'll make them really bold so you can see them. And I'll get rid of the on balance, but actually maybe I shouldn't. I don't know. It's coming down on top of it. So they're both relevant if you look at where we are now, so these are the two deviation markers. This isn't actually the bottom of the trend. It looks like it's the bottom of the trend. It's actually a deviation from this guy of those values. And there's two that I've been using the most. And you can see that those two that I've been using the most, both of them have been validated here to some degree in terms of deviation. And then interestingly, if you look at where those reside, one of them is right here at like $2, which puts you above that creek right there. I don't know if you can see where my mouse is, but right here. So that would be like the first step. And then the second one is up here around 5. That'd be the second step. So these guys coming down, again, curiously, also, is that actually is like right on the bottom. So it'd be like laying on top of the first. So if you laid on top of the first and then you came up and laid on top of the second, you'd be in good position, potentially to go. So again, that might be short term, that might be longer term, but I think it's pretty curious. And then I was going to mention that because when you go back and you look at where that November date is, these deviations triangulated off that, meaning like coming down and using these angles with the vertical, the intersection there. This leads to an area from 62 to 99, which sounds very similar to some of the original ideas that I had, that this was going to come back to this zone right here, which is just underneath the opening price for AMC. So I think these deviations might matter at some point in the future for highs. So it's possible, maybe long term, that we end up seeing something like back to here, but it would be long term. Only thing I could think is using like the very middle of this, so like a wave back around, back up to the top. But that'd be significantly in the future, like 2029, if that's the case. So it has to do some pretty straightforward stuff like breaking out here. And we still have the channel, and that channel is low. So there you have it. Those are the equivalent levels, is what I meant to say, to this idea that we were talking about earlier of like, well, couldn't you go all the way back up to the top because of the on balance? Well, yeah, but it's too far. It is far. But if you look at deviations, they're actually pretty low. So the equivalencies of those are almost like the same numbers. Like this was like 60s to 70s. This is like 60s up to 80s, 90s. Maybe. And of course, the value is not actually the same. It's weaker, right? And I guess one other way of looking at it would just be the simplest way, which is, well, it's just half the value, right? So if you just go up to 394 and say that was the peak when we had half as many shares, so shouldn't we be able to, do a percentage to 0 and then see what the halfway mark is? Well, yeah, but that's kind of where we are now anyways, is we're looking at this as like coming back to like tens. So like the diluted equivalent, does that make sense? Would be coming back to tens. Hence this trend. It matters. Yeah, which is a bummer. But it is what it is. Like, that doesn't make any sense. That's not half. I know. You can do it number-wise. Percentage-wise, I was just going to 0. But number-wise, yeah, I mean, half that would be 180 or something. Which is still really high. I don't know.